Thanks for joining me this Friday, the 18th of July. I'm Grady, Senior Market Analyst through Bell Direct, and this is your weekly market update. Well, the defence sector has been running red hot over the last 12 months amid rising geopolitical tensions, countries reviewing and renewing their spend on the defence front, and technology advancements driving enhancements in the way defence strategies are comprised and delivered. Bell Potter's team brought out a defence note on the sector recently, so let's dive into the highlights and opportunities in the market for you to gain exposure to this high growth thematic. In 2024, global military expenditure reached a record $2.718 trillion US dollars, marking the largest year-on-year increase since the Cold War, with a 9.4% rise. Military spending grew across all regions, with Europe and the Middle East seeing the most notable surges. NATO members collectively boosted their budgets, with 18 out of 32 members now dedicating at least 5% of GDP to defence. That's up from 11 out of 32 in 2023. This trend is expected to persist as NATO and other nations commit to further increases in military spending. Geopolitical risks remain high despite fragile ceasefires in the Middle East and ongoing diplomacy in Europe. Tensions between Israel and Iran persist, and the war in Ukraine, since Russia's 2022 invasion, continues with heavy casualties and limited progress. Europe's defence budgets are strained, and rising geopolitical tensions in Indo-Pacific, especially between the US and China, are increasing military spend, particularly in Australia. These uncertainties suggest global defence spending will stay a key focus for years to come. In 2024, NATO members significantly increased defence spending, with countries now allocating at least 5% of GDP to military budgets. This boost reflects heightened geopolitical risks, including ongoing conflicts in Ukraine and the Middle East, as well as rising geopolitical tensions around the world. As a result of NATO's commitment to defence spending in the sector, it's expected to continue growing in the near future, acting as another tailwind to the sector's expansion outlook. While there are serious growth opportunities, Bell Potter's research team also sees some risks facing the sector, including changes in government policies and de-escalating geopolitical tensions. Competition, supply chain disruptions, and infrastructure access can impact operations, while delays in product development and contract performance may affect financial outcomes. Additionally, funding and capital management risks, including securing finance and managing debt, are key concerns to the sector. Some investors may feel they have missed the rally train, as many of the defence stocks have been running really hot in the last 12 months, but there are still many ways to invest in the sector, including direct and indirect exposure. Direct exposure can be through direct equities like DroneShield, ASX DRO, which provides counter-drone technology hardware and software. I spoke with DroneShield's CEO, Oleg Vornik, this week about his optimism, insights, and outlook for the next 12 months, which indicates the high growth potential of earnings for the company, as highlighted just here.
We're seeing strong momentum for our counter-drone products right across the world. The most recent large sale of $62 million to a European military customer is what we're now busy fulfilling, and will be all done this quarter, as we mentioned in the original ASX release. But then there's been a $9.7 million Latin American sale, a $32 million sale in April to an Asia-Pacific customer, a $11 million contract with the Five Eye military, and this is all very recent. So we are continuing to see very strong demand for our counter-drone products, and the business is continuing to grow.
To see the full interview, follow the link in the description. You can also gain exposure to the defence theme through ETFs like VanEck Global Defence ETF, ASX DFND, and BetaShares Global Defence ETF, ASX ARMR. ETFs offer a diverse range of defence-related holdings and offer a lower risk opportunity to gain exposure to the sector than a direct investment in a defence company, but lower reward for the lower returns for the amount of risk taken on. So that's something to consider. Locally, from Monday to Thursday, the ASX 200 posted a 0.58% gain as the key index reset its record high for a third time this financial year already earlier in the week, before retreating later in the week on trade war concerns. The tech and healthcare sectors led the gains and led the charge this week, with gains of 2.54% and 1.98% respectively, while discretionary and staple stocks posted losses of 0.34% and 0.27% respectively. The winning stocks on the ASX 200 this week were led by Iluka Resources, jumping almost 26%. Clarity Pharmaceuticals rose 23% and Lynas Rare Earths added 17.4%. Capstone Copper, on the other hand, fell 6.01%, while South 32 ended the week down 5.92%. On the broader market index, the All Ords posted a 0.73% gain as DroneShield soared 31% on the announcement of an enhanced R&D spend and expansion of its Sydney-based production facility, while Botanics Pharmaceuticals at the other end of the market tumbled 12%. The most traded stocks by Bell Direct clients this week were DroneShield and BHP. Clients also bought into CSL and Fortescue, while taking some profits from ANZ, Wesfarmers, Macquarie Group, Pro Medicus, Westpac and Lynas Rare Earths. And the most traded ETFs were led by iShares S&P 500 AUD ETF, Yield Max Universe Fund of Option Income ETF and VanEck Bitcoin ETF. Next week, on the economic calendar front, we may see investors react to the latest RBA meeting minutes following the shock hold of Australia's cash rate at the last meeting. Overseas, Fed Chair Jerome Powell will speak early in the week in the US, and US durable goods orders are out later in the week, while British manufacturing PMI is out midweek. And that's all for this week. I hope you enjoyed this defence theme of our weekly and hope you have a wonderful weekend. Happy investing.